Good morning, this is Connor from 0DTE Traders here to present our market minute for October 25th, 2024. In this video, we'll do a quick intraday analysis. We'll discuss the bull-bear transition known as our flip, which has been in play here this week, and we'll finish with a quick performance check. It is 10:30 and the SPX is trading higher, up 0.9% to 58.60. Very bullish start to the morning here with the bulls reclaiming the 58.30 flip and sparking that volatility contraction, which is common pattern. VIX down 4%. Market internals are bullish across the board. ADD plus 1200, volume difference 1.71 ratio, with MEGs outperforming up 1.7%. Most sectors are in the green here. Those that are red, staples, utilities, are trading more flat than down. We are coming up into some big resistance levels. We have 58.60, which we're at right now. We've seen selling pressure emerge at this level in recent sessions, but the big resistance zone to watch on the upside is 58.70. That is SPY 585 call wall, with the all-time high just above that at 58.78. Now we've tested this upper bound 3 times, once, twice, 3 times, and this would be the 4th test. Are we going to break out? Time will tell, but one thing we do know is the more times you test the level, the higher the probability for that breakout. We saw this on Wednesday regarding the 58.25 zone, test once, twice, and then we had 4 tests in that session. 4th test we did break. Same thing with this downsloping structure here. 1, 2, 3, and then break on the 4th test. Now, the 2 most important variables at this juncture is VIX, so volatility. If we want to see that further squeeze to the upside, that breakout, we need vol to stay sold and continue lower from here. Additionally, mega caps. If mega caps continue to hold strong, downside likely to be limited. So just bear that in mind if you're looking to short up here. It may be better to be a little bit more conservative in your strike selection. In terms of 0DTE options positioning, it is skewed to the call side, simply meaning there are more calls being traded than puts. The max call is 58.70. This is the strike with the highest 0DTE call volume, generally regarded as our upper bound. 5800 is the max put, the strike with the highest 0DTE put volume, generally regarded as our lower bound, although we are seeing put volume build at 58.50. And these are dynamic, so this will change as the day progresses, as volume comes in. If we're looking for further upside, we definitely want to see call volume build overhead. If we're looking for that minimum downside, we most certainly want to see put volume building closer to the market price. But anyways, this is something we look at on a daily basis. Gives us a lot of insight into sentiment, trading ranges, and expected volatility. Post-option expiration, which was last Friday, the market has played out true to pattern, consolidation, market weakness in the week following a call-weighted OPEX cycle. We discussed this in our daily market report on Monday, the dynamics surrounding option expiration and the typical patterns in the week of, as well as the following week. And essentially, post-OPEX, the market loses a percentage of its total gamma, in this case, 20%, which removes some of the supportive flows and allows the market to move a little bit more freely. This is known as a window of weakness. In the week following option expiration, we see new positioning, so increased option flows coming into the market. This chart shows the SPX open interest changed from Monday to present. And what we've seen this week in terms of positioning is fairly balanced positioning, calls to puts at 58.50, 5,900, and 6,000. Now, unlike last week where we saw increased demand for basically right tail risk, so way out of the money calls, this week we've seen demand for left tail risk, way out of the money puts, most notably at 5,500 and 5,600. But if we look at everything on a net basis, it is much more neutral than imbalanced. Gamma index, which measures dealer gamma, flat as we trade around that flip. So the battle for control continues. What is the flip? The flip is short for volatility flip. Volatility, as it is typically the transition of volatility from higher to lower. Now, when price is above the flip, it is said bulls are in control, and we would anticipate lower volatility. This is essentially a stabilizing regime where dealers buy weakness and sell strength to hedge their position, which ultimately results in more mean reversion price action. This is generally referred to as the buy the dip regime. If price is below the flip, it is said the bears are in control, where we would anticipate higher volatility. This is a destabilizing regime where dealers sell weakness and buy strength, resulting in more directional whipsaw price action. The flip can often be easily identified by looking at the SPX notional gamma, and it is the transition between positive gamma strikes and negative gamma strikes. As we can see here today, 58.30 is that flip. Above, flows are supportive. Below, flows are destabilizing. Now this week, we've seen the flip shift around a little bit, and we'll look at some examples of the behavior surrounding the flip. But in short here, if you break the flip on the upside, you tend to see a squeeze-like action. If you break the flip on the downside, you tend to see a rapid decline. Now this week, we've just continuously reverting back to that flip, which is an indication of indecision and that battle for control. Monday, Tuesday, Wednesday this week, the transition was 58.45. On Monday, we saw volatility expansion on the break of the 58.45 flip, with the VIX spiking. On Tuesday, the reclaim of the flip, we saw a squeeze on the upside with volatility contracting. On Wednesday, we opened below the flip, and it was very one-sided. A lot of selling pressure nearly the whole day, with a huge spike in the VIX, up 11%. On Thursday, the flip was 58.15. Although this transition was not clear-cut, we were calling for a bit of a chop session between 58.30 and 5800, which is more or less what played out, with 58.15 holding as resistance. So no volatility expansion on that particular day, just digestion from the volatility in the previous session. Today, as previously highlighted, 58.30 is that flip. We saw a squeeze on the upside and volatility contraction. But what do you know? There is no control in the market, and we're reverting back to the flip now, which is deemed as that neutral strike. I'm ending the week green of $5,595, and most of my trades this week were centered around momentum. On Monday, I played the break below the flip with long puts. This was my biggest winner, up $2,000, nearly 500% ROI. On Tuesday, I played the reclaim of the flip with long calls, several trades here ranging from 125% to 170% ROI. On Wednesday, long puts actually entered before that breakdown in anticipation for about 270% ROI. Now, I definitely lacked patience this week. I should have been up 4 times this. These were some really big winners on these long options, but I did lack patience. Definitely something I need to work on, keeping a partial, to take advantage of that larger move if it does materialize. I did trade some credit spreads as well this week. Put credit spreads primarily focused around 57.70. That was the short strike I was selling, which was the previous breakout level from a few days back. Overall, good week, but definitely patience I need to work on. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.